Cost can be classified as either product cost or period cost. For financial accounting purposes, product costs include all the costs that are involved in acquiring or making product. In the case of manufactured goods, these costs consist of direct materials, direct labor, and manufacturing overhead. Product costs are viewed as attaching to units of product as the goods are purchased or manufactured, as they remain attached as the goods go into inventory awaiting sale. So initially, product costs are assigned to an inventory account on the balance sheet. When the goods are sold, the costs are released from inventory as expense and matched against sales revenue. Period costs are all the costs that are included in the product cost. These costs are expensed on the income statement in the period in which they are incurred. Period costs are not included as part of the cost of either purchased or manufactured goods. Sales commissions and office rent are good examples of period costs. Both items are expensed on the income statement in the period in which they are incurred. Direct costs and indirect costs are terms used to relate a cost to a product or activity. Whether a cost is direct or indirect depends on the context within which the term is being used. When describing the cost of a product such as a book, the amount of paper used is clearly traceable to each book and is a direct cost. But the amount of electricity used by the printing press is not an obvious traceable to each book and therefore is an indirect cost. However, when evaluating the profitability of a product line, the total product cost would be a direct cost, as would be specific advertising and marketing costs associated with the product. The cost of a training program designed to make the sales staff more effective with all the firm's product lines would be an indirect cost. One way to distinguishing between a direct and indirect cost is to think of a direct cost as a cost that would not be incurred if the product or activity was discontinued. An indirect cost is one that would be continued to be incurred even if the product or activity was discontinued. Direct labor are the ingredients of the product, the materials that are put into the production process and from which the finished product is made. The cost of direct materials or raw material include the same item as the product cost of retailer. The finished product of one process may be the raw material of another process, just as the finished cost of one company may be the raw material cost of another company. Direct labor is the effort provided by workers who are directly involved with the manufacture of a product or the delivery of a service. For example, workers who perform machine operation on direct materials. Manufacturing overhead or overhead includes all manufacturing costs except those for direct materials and direct labor. Overhead is an indirect cost because it's not feasible to specifically relate overhead items to individual products or services. Examples of overhead costs include factory water, light and electricity, maintenance and cleaning costs, depreciation expense for the factory building and production equipment, or salary cost of production managers and supervisors. As the manufacturing process becomes more complex and technologically orientated, overhead costs generally becomes more significant. Predetermined overhead rate is the rate at which the manufacturing overhead is charged to work in process by inventory. Predetermined overhead rate is calculated at the start of a managerial accounting cycle based on total budgeted overhead cost and some relevant cost drivers. Manufacturing overhead is applied to a product as a product of the unit of the cost driver and predetermined overhead rate. Since actual results are complied at the period end only, the overhead application based on the predetermined overhead rate is useful in costing. Here is the statement of cost of good manufactured. First of all, we need to make sure that the name of the company is on the top. Secondly, clearly write what statement it is and for which month it's prepared. In this case, the statement of goods manufactured is made for the month of May 2014 for Poppy Bakery. First of all, we should work out the direct materials that have been used during the month of May. We have the opening inventory for the month of May, which will be the closing for April. We add all of the purchases during May. We then have a total of direct materials available for use. We take away our closing inventory on the 31st of May, and this will tell us what is the cost of direct materials used. Add to that our direct labor cost incurred in May and the manufacturing overhead, which is applied in May. This gives us the total manufacturing cost incurred in May. We then add any work in process inventory from the end of April. We take away the closing inventory and it gives us our total cost of goods manufactured in May.